Good morning and hello, I'm Professor Code. This is the Forex Supermodel Racing Review and Forex Briefing for Tuesday the 29th of November 2022. We've got nothing to review for yesterday, so the account static at plus 58.30 units. It's been there a long old time and we're going to move it on hopefully very shortly. But today isn't going to be the day. Unfortunately there's no filters, no filter 1, no ratio filter, no alternate and no N-1 filter. It's very scrappy. I've had a good look at it and there's nothing that fulfills the criteria, so we're going to have to stay out today and that's where it is. So but we've got something going on in the Forex market, so we're looking at Forex today then. So bounce trade. If you look at the dollar index, the dollar index is looking like it's positioned for a little bit more weakening. The 10-year and the 2-year US Treasuries, just grab this, are showing higher prices, which is lower yields. Gold is looking at coming up, which is normally a mark of a weaker dollar, and oil is starting to think about coming up as well, which is also linked to the dollar as well. The petrodollar priced in oil, priced in dollars, etc. So what have we got going on today? Well, 1300 you got German T1 tier 1 CPI, consumer price index, and that's going to sort of tee it up for us. So what you're looking for is right, where are we? So you've got German tier 1 CPI at 1300. So that's basically Euro data, EUR data, and then you've got the at 1330, half an hour later, you've got this CAD GDP tier 1. Now, so 1330 CAD GDP, gross domestic product, tier 1. Now, CAD's been sort of having mixed data if you look back at the economic calendar, but on balance is starting to perk up, and equities have had a bit of a rough ride, and if the dollar starts to come off, equities will like that, and so you've got various transmissions going on. You've got this CAD transmission via oil and fundamental data, and you've got the yen transmission, which is going to be via equities and general risk on, risk off. So we're looking at doing a buy order on the CAD yen. What do we know about the CAD yen? Well, the CAD yen operates at about 195 volatility in our models, from a peak of 400 to a floor of 100. So it's operating at about roughly 50%. 50% volatility, so it's not slow and it's not fast, so that's what you can expect if you throw a trade at the CAD yen. So we're looking at sticking a buy order in just prior to this 1330 CAD GDP data, assuming that all the things line up in terms of the transmissions. As we said, we'd be looking at oil coming up, and we'd be looking at gold coming up as well, to give us the negative dollar, and then half an hour later from this trigger data, we've got a couple of tier 2 US housing data points, the Schiller index, etc. So that's going to put the cap on it really. And it'll either go on from there or about turn. So you've got a window about half an hour from 1330 to 1400 to do a buy order on the CAD yen, assuming it all pans out as we expect. So and if you do that, expect medium volatility on it. So you won't get massive gains, but you should get a reasonable return. So that's what we're doing. Racing's unfortunately dirge. We've had a good little period recently. We've got the account back up to a little bit from our previous levels, and the day before yesterday we had a banker, not a banker, a hedge bet come in, which basically got us our money back on where we were. So that's fine. So anyway, we'll leave it there. So watch out for this CAD yen long at about 1:30. That's what we'll be doing. So anyway, thanks for watching, thanks for subscribing, and goodbye.